Welcome to Sparkademy Module 2 on profitability. We've broken this module into 5 sections: business skills, financial reports, budgeting and forecasting, growth and break-even, and speed to profitability. And we'll present the concepts, show you where else you can look to find more information, and supply you with some tools that help you plan your own brewing business to suit what you want and to understand exactly what you need to get where you want to be. First off, business skills. There are 3 basic areas that you could learn yourself, you might know already, or you can bolt in with partners and consultants. And they are the accounting basics, at least be able to look at a set of financial reports and understand what they're telling you. Spreadsheet capability. That's a really great ability to have financially when you're managing a business, but also in the brewery for brewing logs. The third is graphic design and layout skills, just for in-house marketing. It'll hugely help your ability to make a lot of noise and create a lot of interest in what you're doing. Financial reporting. Financial reports are generally profit and loss statement, balance sheet, and cash flow. You generate these yourselves to manage your business, or your accountant provide you with them either quarterly or annually. Profit and loss statement is a statement of financial performance. It shows you how you've gone in terms of revenue and expenses over some period of time. Balance sheet is a statement of financial position, a snapshot at one point in time, and it represents the assets and the liabilities in your business and shows you where you stand as a balance sheet position at one point in time. And cash flow shows, as distinct to profit, which could be an increase in asset value, shows the cash in the business and tracks its flow in and out. And you use that to manage the working capital that you need to make sure, for instance, that you don't overtrade by growing too fast where you're trying to take too much opportunity, simply run out of liquid cash. And although you may have a very valuable business, if you don't have liquid cash, you may not be able to pay your liabilities as they fall due. It's bad credit standing, and illiquidity is what causes business failure. You will have heard people say cash flow, cash flow, cash flow is king when it comes to managing a business, particularly in the early days and particularly if you're growing fast, which is what we hope for you. Budgeting and forecasting. This takes the form of a profit and loss statement with revenues and expenses, and it lets you identify the necessary level of beer sales to get you into profit. Allows you to drive directly toward that, and it lets you understand, if you're tracking what's happening, whether you're winning or losing. There's a template that you can download on the Sparkademy website that I'll talk you through in a moment, but you can use that template to model your own budget and your own forecast to plan your business. You'll need to make some assumptions, and you shouldn't worry about them being accurate as much as just locking something in so that you can peg it to the wall and have a basic understanding of the dynamics of the brewing business. This spreadsheet is the budgeting and forecasting table that you can use yourself. Download it and input the green cells here to calculate revenue, variable costs, fixed costs, and profitability. This table's structured just like a profit and loss statement. So it takes inputs in green here of kegs per week, the sale price of a keg, and the cost of ingredients, brewing labour, and $5 for power. Obviously these numbers don't relate to a particular business, they're just general. You need to use your own figures here. But by inputting this basic information, you can achieve an indication on a weekly basis and a monthly basis of what the revenue of this 15 keg a week brewery is. A typical brew stack, brew and serve on site brewing business breaks even at around 10 kegs a week, wants definitely to be brewing 15 or 20, and if it's been well planned, can sell 20, 30, 40, 50 kegs per week. Mostly on site, small amount of distribution. This spreadsheet only focuses on the on-site revenue. So, we have a monthly revenue due to our level of beer sales. We have variable costs that are proportional to the level of beer sales. It's important to understand with a profit and loss statement or this budgeting tool
that there are above the line costs and below the line costs. Above the line cost are these cost of goods sold, the variable costs that are proportional to the level of sales. When your revenue goes up, these variable costs go up as well. So the revenue minus the variable costs gives you your gross profit, shown here. Below the line are your fixed costs, and these expenses happen every month whether you sell any beer or not. They sum here to your burn rate with no revenue. If you're closed and you have to face all of these costs, you can't turn them down, and you don't have any revenue, this is your monthly cash bleed of expenses. So profitability is achieved when your gross profit exceeds your fixed costs and you break through into having a net profit. And your profitability is indicated when you compare your profit to your turnover, your revenue. So the margin that's achieved on this business is a ratio of its gross profit to its turnover, and its net profit margin, again, the ratio of profit to turnover.
When you're using a planning tool to budget the startup of a business, you should focus on the smallest profitable and viable business that you can achieve as fast as possible to minimize the capital that's needed and to minimize the risk that's involved, but also allow for expansion capacity to grow. So we talk a lot about the second summer, where you have expanded to take commercial advantage of what you've set yourself up for. Whether that's through the utilities, the floor space, extra tank space, plans to add further capacity in future, or layer in additional revenue streams of contract canning for retailing slabs, growlers, distribution of kegs. There are many additional lower margin revenue streams that you can layer on top of a core profitable business to improve it over time. And it's really important to understand what they are and to plan for them in day one, so you don't end up backed in a corner after 2 years when you actually want to have a holiday and be profitable. I'll talk you through these spreadsheets that you can use yourself now.
The best way to understand break-even and profitability is to look at the second tab of the budgeting spreadsheet. You can download that from the Spark Academy website, plug in your own numbers and play around with this business model. But what you see here is the revenue, cost of goods sold, gross profit, fixed costs and net profit split out month by month in a table across the top. An input of a monthly growth rate here in green that you can adjust, and the other 4 numbers are brought across from the previous tab. So I've set this up here with a business that opens in October selling 5 kegs per week, losing money because the fixed costs are greater than the gross profit at that low sales level. With 12% monthly revenue growth, because this company is focused on marketing to grow their sales, you can see incremental increase in revenue, and of course the cost of goods are variable costs, so they also increase incrementally as the revenue increases. Of course the fixed costs are the same by definition, they're just the same, fixed every month, there they go. And sure enough, in January, in month 4, we can see the gross profit exceeding the fixed costs and the business for the first time breaking even into profitability here. You can identify it on the chart here. The yellow is the gross profit and the green are the fixed costs, fixed throughout. At this point here, gross profit exceeds fixed costs and the business is profitable. Net profit, the orange line here, is above 0. I'll summarise that again. It's a complex topic at first, and if you download this document, play around and bring it into your own thinking, it'll become a lot simpler. But long story short, revenue increases as you do marketing and people become aware of your business after opening. Your fixed costs stay the same, and at some point your revenue growth and the gross profitability that you're generating tips you into profit, into the black. In this case here, you can see that that's after 4 months at this point here. So this small, simple model is quite general. you'll need to make some assumptions about the costs that are in the business that you're planning. And they, as always, they don't need to be accurate. It's quite true that budgets are useless and budgeting is invaluable. So while your forecast and your specific budgets do not need to be accurate, you absolutely do need to do them, because it brings your focus onto the small number of things that are very important and allows you to track the small number of things that are very important in your business by management accounting to ensure that you're heading the right direction. You absolutely know what your BE costs you and what your fixed costs are, and you can understand exactly when you're making money and when you're not. It's a critical aspect of running a good business and being successful in startup.
In summary, to end this module 2 on profitability, it's important to note that the 5 most important critical success factors that we've looked at to focus on in planning and managing your business are much more important than everything else put together. The significance of this is that you should focus on the small number of things that are very important and not get distracted with things that aren't actually significant for the business. Once you're trading profitably, it's then your prerogative to do what you'd like in terms of other interesting and fun things, but it's a matter of focus to ensure success. So the bottom line is you want to get the tanks full and get the turnover up as soon as you can. Break through into profitability and go from there. Thanks for listening. Hit the Sparkademy site, sign up, listen to some more modules. Catch you soon.